Good morning. Sorry, I'm taking a little bit for things to load on my end to make sure everything's going. Good morning. Welcome to Wednesday, to our live stream. I'm super pumped that you're here. If you're here for the first time, glad that you decided to join us. Now, during these live streams, I'm going to be sharing my daily trading bias. I'm going to give you an understanding of order flow and a front row seat to all the action. No fluff, just the good stuff. If you're watching this after the fact, you can jump to the key moments using the chapter markers below of all the trades that I've taken, along with the explanation of what I was thinking and why. And then lastly, if you're looking to take your trading to the next level, and or you are using your personal account and you're burning through it and you're like, I need a little bit of risk, but I just don't want to do demo because there's just no risk, then you can use my code DTJ to get anywhere from 50 to 90% off your next evaluation account with Apex. And that will give you anywhere from $29 for an account, down to $17 account, up to about $80 an account, depending on what account you choose. So feel free to check that out. And with that, let's go ahead, open in prayer, and let's rock and roll. Father, we just come before you this morning. We just thank you for your goodness, for your kindness. Father God, we thank you that you're good. And Father, we trust your name. We trust your leadership as you continue to take us down this journey of being profitable and providing for our family through this means. Lord, I just pray that you'd bless everybody here, that they would see increase with their trading, they would see increase in their relationships, Father, that your hand would be moving in their life. Lord, we just honor you, and we thank you in Jesus' name, amen. Okay, folks. Good morning, Tony. How are you doing? Glad to have you. Let's get rocking and rolling. I'm going to get my stuff set up here. We do have FOMC this afternoon. So with that in mind, we are going to be pretty conservative. Really the only target that I'm probably looking for is previous day high, which was tagged right here, but then we have the previous day high and the new week opening gap. I think that's really going to be all that I'm looking for. I would like that to be ran. We'll go ahead and mark our oh, that's not very big. Okay. We got a 30, 40, almost a 50 handle opening range gap right now. Let's find midnight open. Let's see if it's been tagged. There's midnight open right there. What was this? 1 a.m. Just a rocket higher. So we haven't tagged. Oh, no, we did. Right here. Midnight open's already been tagged. Okay. And London low has been tagged. What about London high? London high is not. And then let's grab our new day opening gap. We don't have one. So we will be marking just one of those new day opening gaps. just so we know what the level is. And that should cover everything that we need. Good morning, Daniel. Good morning, Wilhelm. Good morning, good morning. I'm having issues with my screen. I'm trying to get this screen up and running because I like this one. I like the way it looks. Oh, there it goes. Just sometimes doesn't do it right away. All right, if I'm looking at where I want price to go, I would like to see it dip down into this 4-hour fair value gap. I'd like it to reach there. I don't know if it's going to. That's quite a run. I mean, it is 100 handles. I guess it's not too bad. I don't know why I can't see it. There it is. Dip down into that fair value gap there, the 4-hour, and then move higher. I initially want the dip. I want the dipperooski. I want to move lower. Looking at the hourly, we've rolled over here. Look at this hourly right here. Hourly comes all the way, but does not touch the new day opening gap from today. It doesn't actually touch it. It stops right above it. And it also left this liquidity right here on the screen, which gives us that and that all the way down to a potential hourly fair value gap down here. On this buy side imbalance, sell side inefficiency. Three minutes till market open. We tapped the previous day high right there, a signature and price that gives me confidence, at least to potentially look for a move lower right now. All right, we got our 930 model executed. I'm seeing this as that sell side. This is the low of that hourly candle. So there's liquidity down here. I just really wanted it to reach back up here before I take an entry. I don't think it's, I don't know if it's going to give it to us or not. Doesn't look like it. There's that hourly candle. On a 15-minute basis, looks nice for this push lower. I want to see where this candle closes here. See if we can get any type of retracement. Deborah, good morning. T-Loft, good morning. All right, so this is our green candle. Let's see from here where we go. Watching the midpoint of this wick. Five-minute candle is about to close. I'm going to take a maybe a little stab here at all the way to go down to the, let's see, nope, it's going to go up too quickly. Nope, we're not going to mess around with that. That's going up too quickly. I really like this 4-hour target. It's not that far away. If I had a preference, I really would want it to come up to there. It's quiet this morning. How are you guys doing? T-Love, you waiting for 2 p.m.? It's not bad. I'm gonna for my small account challenge. I think that's what I'm gonna do. Is wait for 2 p.m. or 2:30. I think 2:30 is the time that I want to wait for. What reaction was that? All right, so now that we tagged into this 4 hour, I don't know what's going to happen, to be honest. Do we want to push lower? Do we want to push down? Do we want to fill the 4 hour fair value gap altogether? Do we want to fill just the hourly fair value gap? Run for liquidity, which we just ran for liquidity. So I don't see it doing much after this. I mean, I know it's going to do something. I just don't know what it wants. It will want to do. Alkai, good morning. Rate decision. Yeah, I'm going to guess they're not going to do anything, Daniel. My guess is they'll do nothing. They won't change the rates. With all of the uncertainty of what Trump's going to do with tariffs, I don't think they're going to want to lower anything, because that will increase inflation. And you add inflation on top of tariffs which cause more inflation. I don't know. We'll see. Yeah, some sell side at this 15-minute. Also a breaker sitting right here at these highs right here, sitting at 11 a.m. from yesterday. Good morning. Hang flying, how you doing? 5 hour. Let's go down to the 15-minute on this. Yeah, the low of this hourly is actually the breaker, so. Who here watched ICT's video from yesterday where he showed the PM macro, how it didn't run the high, and he was like extremely confident, like it's not going to go above this level? Did anybody watch that? Yeah, hang flying. It's a FOMC this afternoon. I did some back testing on. I was like, okay, is there anything relatively close as far as a model that I could come up with that falls in line with what he's talking about? And I honestly, I'm only sharing it here because I'm not making a video on it, but I think I may have come up with something. I don't know. Maybe. I want to go over some of that and just get your guys' thoughts on it. Because I think there's some legitimacy. So he, for those that haven't seen it, ICT did an execution video yesterday where price was, we're waiting. I don't know what's going to happen here. So we're waiting for a little bit. Price does this. Price aggressively runs higher. It makes the high of day, and he goes short right here. And he says it will not violate or move higher. And he put his stop right there. That's where his stop was. He had a 5-handle stop. And he says it's not going to go higher than that. He basically put his stop above the midpoint of this candle, which framed this inversion fair value gap, and said that it's going to go lower because it's already, this is what I wanted to figure out. He said it's already put in the high of day. And I'm like, okay, what characteristics do I see in this price action that can tell us he put in the high of day? It was an opening range. I don't think it has anything to do with the opening range because I can't get anything relatively close to this exact number. And I don't think it's a number. And maybe there's some overlapping correlation with the Fibonacci tool. But this what he called this the high. And I have a hunch on what I think it is. And I did some testing on it. And the only times that it ever did what he described was in the situations that I actually backtested. It wasn't a lot. I mean, in the last, I think it happened 5 times in 3 months, 4 months, or something like that. So, I mean, it's not something that you do every day. But I'm interested to see if what you guys think on it. I don't care if it gets out there or whatnot because, like, I have no idea if it's actually his or not. But it was really interesting. It got me thinking. It really did. But we'll wait till after the macro. Somebody remind me after the macro. So at 10:15, we'll check it out. I just want to make sure we're here for the macro time. And we're not missing out on an opportunity if there is one. And if you haven't seen the video, check out the video. I didn't know also that he started a Telegram channel. I joined it just to see what he's about, see what he's talking about. Let's see if he puts anything. He put anything out yet. So he says there will be no real-time commentary due to FOMC risk. So he's not trading today. Here's where my concern is as far as where we're at right now. Okay? 15-minute looks beautiful for continuation lower. We're inside an hourly fair value gap, a 15-minute fair value gap, and this bullish order block right here. This bullish order block is sitting right there. And it is, in fact, the hourly low. And that is a 15-minute OB. So we got a 15-minute OB right here. No, in my opinion, no pressing reason to move lower. And honestly, I think the draw on liquidity is higher. So I think anything we see lower is manipulation for potentially an afternoon FOMC push higher to the new week opening gap. I've heard that the first 30-minute candle is bullish when 70%. Yes, I want to go over that too. I'm going to show you guys some stuff today. I signed up for a trial, and I don't know if I'm going to keep it or not. It's called Edgefully, but everything you're talking about is on that there, Tony. And we'll go over some of it. I'll share some of those resources so you can check it out. I'm just testing them out, seeing if there's any benefit. I was hoping that I could back test different things, custom features, but they don't. They're preset ideas, but we'll go over that. It's called Edgefully. But going back to what I was saying, I see reason for a higher move over here. This is really where I think price is going to be running towards, these levels here. The 127 new week opening gap, high and low. This is also previous day high. So you can see this was opening price for Monday's price action or Sunday's opening price. And we just collapse over the week on Sunday. So I see us honestly moving higher more so than moving lower. And that's kind of what I would be looking for, is a 5-minute change in state of delivery. This doesn't look bad here. It's 15 handles. But this stop loss is also 18 handles. Let's see if it gives us an entry. Just towards the high here. I would feel way more comfortable if this closes lower and then we get an order block right here and then we close above this level. I don't see us reversing right now. I'm just looking at the potential retracement play towards the sell side low over here, which is a breaker. That's really all that I'm looking at. Because this is that's a 15-minute order block there. 16 seconds left on the candle. Nothing. 15-minute candle closes here in 1 minute, and that will be our 10 o'clock candle as well. Let's see where price wants to go. I'm assuming we close without running here first. Looking at this 15-minute candle, it will give us a green close candle potentially. And then we could run up here into this fair value gap for a lower move if it wanted to go lower, or it may dip lower, grab more liquidity under here inside the hourly buy side imbalance, sell side inefficiency, and then push higher. We'll see what it wants to do here. But we're going to wait for 20 seconds and see how price wants to react here. Preferably, I'd like it to run lower, down to the 15-minute order block. Depending if this keeps going, it might be the candle for a quick scalp. Nope, doesn't look like it. No close. It's probably going to run without us here towards those highs. That sucks. Even if you were to take that, this is where you'd want your stop to be break internal hot swing high, stop at break even. So if you try to front run that, basically you'd be getting stopped out. Let's see if it closes here without running that high. you could probably chase this. I'm not going to, just because of FOMC. Yeah, so there's the target. Just the risk to reward from here to here is just too, I mean, it's too large for a risk. Also, if price violates the first hourly candle, the initial balance, then there's a high chance it won't return to the high or low. Here's our first 30-minute candle. Closed lower. I think there's a statistic on the first 30 minutes if it closes lower, if it's going to be high or low, but I wouldn't really count FOMC. Here in 15 minutes, we're going to go over those two things that I talked about. We're just still in the macro. I just want to make sure we're not, we're staying on the charts. So we just ran into the sell side order block. Excuse me, sell side liquidity, but that should technically, let's see, what does that look like on the 30-minute? Yeah, it's an order block on the 30-minute. We'll just call it a 15-minute OB. So we're between two 15-minute OBs. This one and this one. I like the sweep of liquidity with this 2-minute right here. This 2M. Easy point of liquidity right here. Five-minute, still haven't come over the 5-minute change in state of delivery. I think this pushes higher right here. Ugh. Speculative trading, it's so bad for you. It's so bad. So bad, so bad. Look at this 2-minute, and you have a breaker right here. Low, high, lower, low. Breaks into it with a potential move higher. I think we probably see that. Small little volume imbalance right here. Appreciate it, Ted. We took the 930 model, and that worked out for us. I wanted to take this inversion to the upside, but it just didn't give us a nice entry. So nothing there yet. I'm considering taking a long right here. I want to see if it wants to get through this breaker here, though. Right there. It's a little quiet today, simply because we are not looking to take anything crazy. Okay, so while we're sitting here, it's 9:15. All right, let me show you this. I want to see how this responds here, though. We swept liquidity. We could run lower here. Let's see if this closes above here or below. Okay, I'm going to take a stab right here. Let's see if it stops me out or not. I'm going to go down to the order block at 7. $79. 479. If we can get below this level here, I'm going to move my stop to break even. Right there. Nope. All right. Okay, so here's what I wanted to show you guys. ICT was talking about, or he basically said that this level was not going to be broken right here. That we would not make a new, that high was already put in. This was the high of day. So these were the rules that I basically came up with to find out if a high is put in or not. So this is the level right here, right? This level right there. And the idea is if we see price spool higher from 2 p.m., from the 2 p.m. macro or somewhere in the 2 p.m. macro, and it spools higher and it closes, it has a high created in the 3 p.m. macro and reverses, leaving an inversion fair value gap, that price would not come back up to this level. Price would not break this high. Based on those rules, I had sometimes I had it would make a high a little bit earlier, but never later. But every time that it did this, it did not break that high. So the idea is price has to spool. Look how this looks like it's intentionally spooling. Looks intentional. It looks algorithmic. Like, boom, I'm going to make this high right now. And then if it runs liquidity, makes the high, and then leaves an inversion fair value gap, there's either two. An inversion fair value gap on the buy side of on the accumulation side, or a fair value gap on the distribution side. When price comes up into that inversion or that first fair value gap, you take your long or short. And that's kind of what I went back and I tested. And for the most part, it played out. I'll show you all the times that I've seen it happen. Let's go. We need to go into regular trading hours because it's based on regular trading hours. Did I delete? I hope I didn't delete them all. Okay, so here's another example. So this happened on January 14th. Look how price starts in the 2 p.m. It consolidates beginning at 2 p.m. But then after 2 p.m. or during 2 p.m. hour, it spools lower and it creates the low of day. And look when it makes the low of day. It makes the low of day in the 3 p.m. macro. Makes the low in the 3 p.m. macro. Here's our inversion fair value gap that you can go long in, or you can go long when price comes back down into the first fair value gap that it creates moving the other direction. And it doesn't come back down, it makes that low of day. Let me see if I had another one here. Here's another one. Okay. Price is making lower lows. Beginning at 2 p.m. it spools lower. Very intentional. And then it spools lower again, creating a low right at 3 o'clock. Here's your first inversion fair value gap. Everybody thinks price is going to continue lower. And as it aggressively runs lower, it bounces off of the first inversion fair value gap, moving higher. Now, this is nothing ICT's mentioned in any of his videos. I'm just like, hey, if there's a way for us to figure this out, maybe this is it. And I'll share it with the community, let the community try to decipher ICT's rhetoric. But also, here's the first fair value gap on the push higher right here. And price comes into that level as well. Stop would be at the midpoint or below the midpoint, the mean threshold of this candle here, which frames that fair value gap. And then it pushes higher and closes above that low. So again, the idea is it has to close in or around the 3 p.m. macro and make a low of day. And it needs to show that it's spooled lower. It's spooled lower here. Consolidated, spooled lower to make that low during the 3 p.m. macro. And then it creates an inversion by moving higher. The creation of the inversion, meaning the violation of this fair value gap, now validates this idea that the low of day has been put in. Again, this is speculation based on what ICT's been talking about in one of his videos and me trying to figure out if there's any patterns that I'm seeing. Okay, here's another example. This is one where it happens slightly before the macro happens. All right, look at this spooling higher. Look how it is algorithmic in nature. That looks very intentional. This is 2 p.m., has a low of day at 2 p.m., but it spools higher, and then it spools back down the other way, creating what? The low of day. Creating the low of day right here, right before the 3 p.m. macro. As soon as we have an inversion, right here, the low has been set for the day. We see price push higher, and the next time it comes back into this inversion is right here, and guess what? It stops there, it doesn't run lower, and it closes above the low of day. Now the opportunity isn't in the inversion, the opportunity is in the first fair value gap that it creates, and the fair value gap that pushes higher. You see price do an institutional order flow entry drill, and then runs for this high that was artificially created through this algorithmic price action. There's that one. Let's see if I think I did another one here. I found another one as well. Okay, here's one where low of day was not taken. Look out, and this is to reinforce this idea. Okay, so we have price at 2 p.m. right here begin to spool and intentionally run lower. Intentionally, in my opinion. We have the low of day sitting right here. At 3 p.m., inside the 3 p.m. macro, what does it not do? It does not take the low of day. Low of day not taken. This, in my mind, is saying, okay, well, if it's not going to take it, maybe, speculation, this is me I haven't been able to backtest this for very long. But I'm sharing it with you guys to maybe you guys can dig more into this and share it with the community. Because ICT doesn't want to share it. And maybe this is it. I don't know. I'm just a guy on YouTube, you know? We have price running lower and stops before the previous day low or the low of day, and then runs higher during this 3 p.m. macro. What if this signals that lower prices are going to take place? This could signal lower prices have an option. So if we see price running back lower after the 3 p.m. macro, we can see price fall even further potentially. Let me go to another one. I was doing for my back testing. I have to go to another screen here. Make sure it goes there. Okay. I think it was here. I think this is one that didn't happen. This is the first one that I came across that it didn't happen. Well, actually, no, I take that back because it never ran the high day. Here's high of day. We have the spooling, but guess what it doesn't do at 3 p.m.? It does not run the high during the macro and then runs the high after the macro. And what does this signal to me? That because the high was taken after the 3 p.m. macro, maybe we again see higher prices. And that's exactly what happens. We see price move lower, grab liquidity, and then it spools higher above the previous day high. Which for me is validating everything ICT is saying as far as the algorithm that he looks. He's looking for the PM macro for the high being set in, and every time it's not within the 3 p.m. macro for the high being taken, higher highs are an option. And every time that I've seen it, it does it. Let me see if I got another example here. Here's another example right here. We have low of day sitting right here. And look at the spooling of price lower. The spooling of price beginning at the 2 p.m. macro is moving lower. This is the silver bullet ICT talks about. And what does it do? It runs liquidity in the low of day prior to the macro. So this is the one example that I'm seeing it happen actually before. I haven't seen it happen after. But we run the low of day right here, and then we get a reversal after we sweep the low of days during that 2 p.m. hourly session, and then it moves higher. The macro's at 3 p.m., so it happens before, but in this scenario, the low of day was set, even on this example, but the key signature and price that stands out to me that I've seen over and over and was in the example ICT shared was this spooling of price right here, aggressively towards the low of day. We got it put in. This is the first inversion that's created. So when the inversion is created, based on the rules that I'm backtesting, the low of day is set. Here's another example. I'm just going over all the examples that I did that I'm finding this, and it's kind of grabbing my attention quite a bit, blowing my mind a bit, okay? And this example, this example is not, because this is part of price action. I think this is today's, Thursday, yeah, this is not an example, because this technically is the high of day right here. So I started testing this one out and realized that this was the high of day. Right there. That's the high of day. So this is not an example. Do I have any others? And I think that's it. I think that was it as far as price action goes. So when we go back and look at his initial example that he basically revealed this to us, where is it? Where am I? Oh, here we go. So if we go back to his initial example, what do we see that's similar to everything that we talked about? We see a spooling of price. We see the high taken. We see an inversion. Once the inversion happens, the high is solidified, and it's during the macro time between 2:45 and 3:15. The high is set, and based on everything that I've seen so far and that I've shared with you, it seems to me that we might be on to something. So I'm sharing this with you guys and everybody else here to dig into this more. And if you could, share your findings with us. Share it with the community. Post it on X. Let me know what you guys think. And there we go. We'll see you guys in the next video. As you can see, I just turned that into a video. Okay, but it's been very intriguing, honestly. Very intriguing to look at, and I think there might be something here that we could actually see. And the signature that I see in price is this spooling higher and higher towards the highs, and it's happened every time it's happened. It's been clear. It clearly set the high. So what do you guys think? Is this something? Do you see this? And go back and test it. If you've done this, what are you guys seeing? TOC, time and price? Yes, time and price. That's what I'm thinking. But what I'm trying to articulate is that I think there's a specific set of instructions that happen during this time that if we can see the signatures in price, it could tee us off that a high is being set. So when we come into an inversion, we can be confident that we have an opportunity to, in this case, we could have got 24 handles. If it comes back up again here and we know it's not going to hit that high, it ran for this low right here, 70 handles. So I just want this to be tested out by the community and see if anybody else is finding it that likes to back test more than me, because I'm not a back tester. As in, I don't go through years and years of data. Last thing I want to show you, we're probably going to call it a day early today. I'm going to show you some other stuff. Yeah, we're just consolidating. Yeah, we're not going to take any trades. Is Edgefully. How many of you... Here, let me... share my screen. How many of you have heard of Edgefully? Edgefully is a tool that gives statistical data on several different things that you may be interested in trading. Some of them ICT concepts, some of them very common, for example, the gap fill. These are the bookmarks that I have based on price action that I just selected. I have the gap fill, opening range balance or breakout, opening range breakout, outside days, average consecutive bars, opening candle continuation. Now, all of these gives data on the likelihood of this happening. So if we look at the gap fill, today, status for today is the gap was filled. If we look at the statistical data of it, it's saying that on a gap up, the gap is filled 53% of the time. On a gap down day, it's filled 64% of the time. Well, we already knew this to some degree with just what ICT is taught, but it doesn't give us the statistical data on the 50% level, which I would be more interested in on finding out what is the percent of 50% of the gap being filled. Because I think that changes this data to be significantly higher, above 70%. I think that's what that would be. But then it gives you all the data, it gives you all the times that it's done it, and then it gives you a video explanation on what the idea is and how you can turn it into a particular model. And then it gives you a chart explainer where it explains the chart or explains what the gap fill is. So when you have day 1 to day 2, you get your gap and what is the likelihood on this premium gap being filled on that second day. The other thing that it doesn't do, it doesn't tell us, does it fill the 50% within the first 30 minutes? So another extra bit of detail that this doesn't give us, and it's why I'm thinking like, is this going to be very valuable to me looking at some of these things. Let's look at the opening range breakout. So here's opening range breakout. So according to the statistics here on the opening range breakout, 23% of the time it breaks out, 22% of the time it breaks down, and 54% of the time it's a double break, which I've talked about double breaks, and that's talking about the opening range. So we can see what the opening range is here. We have the opening range set in the first 30, I believe it's the first 30 minutes. So here's the high and the low, and there's a 54% chance that it's going to break above that opening range and then below. So they're trying to articulate here in this example that if there's a 54% chance that it's a double break day, that means the first direction is the manipulation, and the other side of the opening range break could be the distribution. Just some helpful bits of data that you can do. But those are just some examples. Now, you can choose any asset, whether it's stocks, forex, crypto, futures. I do not have, I'm not making any money on this. I'm just sharing it with you guys so you can decide if you think it would be helpful for yourself when you're looking at statistical data. Because statistical data given to me without me having to do it is kind of nice. I'm not going to lie. Then you get to choose your ticker. You can have, obviously, whatever the asset you're in, then you can choose your ticker based on that asset. And then you can choose your type of report based on the type of type of trading you do. So whether it's price action, volume, or indicators. And then you can also look up based on scalpers, day traders, and swing traders. And obviously, I have price action here. If you do it based on volume, it's going to choose the report. There's going to give you a different list of reports based on volume, right? If I switch to swing trader, it's going to give me all of the reports based on swing trading that you can see right here. So all of these are examples: inside bars, green, red, day streaks, right? Those might be really helpful for you if you're holding for multiple days. And then you have day trader. So for day trading, you have engulfing candles, fair value gaps, inside bars, gap fills, initial balance, breakout, opening range breakout, outside days, RSI, SMA, Williams percent range. We even have FOMC. We'll check that out today since today's FOMC. Green, red days by weekday, performance by weekday, average consecutive bar, candle body ratio, high low by day of week, intraday range window, intraday timing, opening range indicator, opening week range, previous day range. I'm just going over all of these so you know if it's something that you maybe want to look into. ADR average, ATR average, Asia range, overnight breakout, Fibonacci levels, pivot points, intraday volume and range by day, weekday, economic data volume, and market open volume indicator. And those are all for simply the day trader. Then you obviously choose your report. You can choose how far back you want to test, whether it's 1, 3, 6 months, a year, 2, 3, 4, or 5 years, you can choose. And then it gives you standardized reporting, how you may want that to look, which may be helpful to you. For me, what this is not, I'll tell you what this is not. This is not a customized, I want to study something specifically I'm seeing in the charts, and I want to back test it. For example, we recently talked about ICT's idea that the daily high is being set in the 3 p.m. macro. Well, this isn't going to give me that. This isn't going to allow me to customize that stuff. It is based on what Edgeful is going to provide you, what they think is relevant. There's probably adding more all the time, which that's going to be very helpful. But if it's not what you're looking for, you cannot do custom items. It's all going to be based on what they already have. So far, my overall thought is it's good to give you a statistical idea of what these levels are. And I said I wanted to look at FOMC, so we'll take a look at FOMC because it's relevant for today. So if we look at FOMC performance. Let's see what data it gives us for FOMC performance. So this is based on, this is pre-FOMC and this is post-FOMC. And it looks like it's talking about what the range is, what it's looking at as far as 15 days before FOMC and 15 days after FOMC. That's not very helpful for me. I care about the day of FOMC. So here is the day of FOMC. Zoom in here. I don't know if that's any better. Here's the day of FOMC. And to be honest, I don't think this is not helpful for my style of trading. So 3 days pre-FOMC, it moved 1.8%. And after, it moved 1.9%. That's not really helpful for me. Pre, day of, after. Yeah, maybe it is for you. Maybe it is for you. But I just want to give you guys an idea of what the discovering is. Just it lists all of the different types of reportings that they give you. You got your reports, what's in play, watch list, economic calendar. So it's a subscription for $49 a month that you can pay for. I think it gives you, there's a 7-day free trial if you want to try that out. May be helpful, but I just want to give that info to you for you guys to check out if it's something that you want. Again, I don't have a code or anything. I'm not getting paid for this. I just thought it was interesting. If there are any other statistical data software or programs you guys use, drop them in the comments. The comments below, would love to hear what those are. Maybe we can share them again with the community here at large. So that's going to be it for this video. Thanks guys for watching. We'll see you later. Take care. I just did 2 videos in one day. I didn't even plan on doing that, but we did. You've seen it on X, Tony? I've seen it on X too, and that's kind of where it initially came from. I'm like, where are they getting this from? Is it helpful? I'm 50-50. I don't think I'm going to pay monthly for it. I think for the 7-day free trial, I think it's worth it just to know what the data levels are, because it goes back 6 months. You can see the odds on it. Oh, it's the first hour, Tony? Instead of the first 30 minutes? Well, price isn't really doing much. It's slowly making its way lower inside this 4-hour fair value gap. And we just tagged the 4-hour level. Or the 4-hour consequent encroachment. So I think we're going to call it a day here, folks. I probably will be checking out the charts at 2:30, but I'm probably not going to be. I'm not going to be really doing much for the rest of the day. So we'll be back here tomorrow, though. So we'll be back tomorrow. Hopefully we see some better price action, and we will rock and roll then. So you guys stay safe, take care, God bless, and we'll see you tomorrow. Bye-bye.